previous topics of discussion and how it all ties in with Ali is going to talk about. He's going to be discussing why long-term relationships matter with your investors. And again, keep that in mind. That is so important when you collaborate. I don't think I need to get on any further with this. Everyone, please put your hands together for Mr. Ali Husain.
Okay, good afternoon, everybody. Assalamu alaikum. So, I don't know how the hell I'm supposed to follow that. I mean, the only thing we have in common is the hairstyle, maybe. Ganja kaun bolega? So, assalamu alaikum, everybody. My name is Ali Husain. I'm the CFO of the power division at a company called Analog Devices. In a few minutes, I'm going to tell you about what we're doing and what we have done to attract investors and hold them for a period of time. And what that means in terms of what we're now able to do. And I'm going to bring it back on a personal level and have that be a little bit applicable to what's happening in Pakistan right now. So this is my background, but basically I'm a finance guy. I'm a finance guy, and I've lived in Canada and I've lived in Boston, but for the last 16 years I've worked at this company called Analog Devices, and I've cycled through a variety of different finance roles, through accounting, investor relations, treasury, and what have you. But in any event, now I'm the CFO of this division. And what's been rather interesting over the last several years is we've done a pretty good job of dealing with Wall Street and getting our market cap up. So today I'll talk to you about what we're doing there. But in any event, we were ranked, top 3 in terms of the best investor relations program, best investor relations professional. And this is by the Institutional Investor magazine, which is a prestigious organization in the US. And what I'm particularly proud of is the fact that we essentially changed the game at the company by essentially optimizing the balance sheet and recapitalizing the company with $17 billion, primarily of debt raised over the last several years. So $17 billion sounds like a lot of money. It certainly is to me. But in a few moments, I'll tell you about how that actually pales in comparison to how much money actually is out there looking for investment opportunities. So I'll give you a little bit of background on this company that I work for. This is a technology company founded in 1965. So if you told me a almost 55-year-old technology company would still be around, that's pretty remarkable. We generate over $6 billion in revenue. Our gross margins are over 70%, which is, again, quite remarkable for the hardware space where we operate. $40 billion market cap, and we have roots in both Boston and Silicon Valley in California, where I'm currently based. So this is a pretty broad company, 15,000 employees throughout the world. We have 50,000 different product SKUs, 100,000 customers, so a very, very broad-based company. The markets we target are the industrial space, automotive, infrastructure, and then within those markets, some pretty cool applications like robotics, industrial Internet of Things, 4G and 5G infrastructure, and then in the automotive space around safety, autonomous driving, what have you. Okay, so when I took over in 2012, this was the problem statement. Revenue growth was slowing, and our revenue, in fact, had been flat for the preceding 10 years. And in fact, in 2012, our revenues had decreased 10% year over year. So not only were they flat over a 10-year period, when I took over, it was down 10%. Our expense structure was quite high relative to our peers, and certainly relative to our historical levels. And so as a result, our profitability levels were quite low. So abhi jo main aapko bata raha hu, this is nothing interesting for an investor. None of this is interesting for an investor. Ki aap jaake unko kahani sunaye ki ji hamari revenue growth is down, hamari expenses are high, profitability is low, nobody wants to invest in you. Acha, on top of that, we operate in what's a highly cyclical industry. So semiconductors tend to sit at the end of a very long supply chain. And investors do not generally like cyclicality. They like to be able to model out sustainable earnings, and that generally grants you a higher multiple. So in any event, ये कहानी का ये मकसद है आपको बताने के लिए कि this was like a pretty dire situation that we kind of walked ourselves into. But I'll tell you what happened. So over the last 7 years, this is my attempt at Microsoft animations, by the way, so bear with me. So over the last 7 years, we've increased the enterprise value of our company from $9 billion to $45 billion. So that's a 5x multiple. For the VCs in the crowd, that's probably not a big deal for you guys, but for a publicly traded company like ours, it's kind of a big deal. The other thing I'll point out is when you look at the revenue, certainly the revenue, which is the area in blue, increased. It certainly has increased, but not as much as the market cap increased. So what happened? How did we do that, right? Well, there's several things that we did. First of all, we right-sized our business. We got rid of underperforming businesses. We fundamentally made the business more profitable. And in addition, we made acquisitions to fill out the portfolio. So basically, ये सब करने के बाद, we had a much better company. But what we also did was, as I pointed out earlier, we essentially recapitalized the company by issuing a lot of debt. So $17 billion over the last several years. But more importantly, I say, or as importantly, it was in how we communicated with investors, how we engaged with investors, how we targeted investors. And somebody asked me before I got on stage, you know, what's your topic? It's about winning investors over for the long term and why it matters. So the person said, well, why does it matter? Because ultimately they have the money. And so it's how do you present yourself in a way, how do you tell your story, how do you pitch yourself as a management team? And so those are the things that we actually worked on over the last several years. That in tandem with the things that we were doing within our business really helped to increase the enterprise value of the company. So there's probably more than a top 10 list, but because I'm limited to one slide on this, I wanted to just talk to you about some of the learnings that we had. The good news is you guys are in great hands because a lot of the panelists that came before me have talked about some of these things, right? Right. And they've done a great job. So in some respects, this will be a bit of a review. But the first thing we found was it was all about our credibility. Were we actually going to do what we say we're going to do, right? So it's about knowing your numbers. It's about knowing your risks. It's knowing about your industry, your market. Certainly knowing your competitors and your competition. You know, मुझे बड़ा अच्छा लगता था, मैं investor meetings में बैठता था, and I used to say all kinds of nasty things about my competition. And ultimately, I found out that's actually the wrong thing to do. Because even though it felt really good at the time, the reality is investors are looking at you because they're generally focused on a space. And if they're focused on a space, they're looking at you, they're looking at other competitors of yours. So really focus the conversation, first of all, on being respectful about your competition, but also talk about why you're differentiated relative to them. Ultimately, number one, this founder management credibility point is about trust. So it's really hard to earn, but it's very easy to lose. So be honest, even when it sometimes feels like it's really hard to be honest, particularly when your business is going down or you're going through tough times. But be honest about what's happening and tell your investors about the plan and how you're going to fix it. Okay, solve for the customer problem. Many people have talked about this. We are a heavy R&D shop. We do a lot of engineering, lots of awesome products. And I would tell you, a lot of times these products do not sell, even though the technical specs and the merits are fantastic. Because in reality, what's happened is we've solved for a great technology problem and not particularly for a market problem. So again, I think I'm repeating what was said earlier, but I think it's really important to do this. Ask yourself this question: is my product truly differentiated? Ask yourself this question: if I shut down my business today, would anybody even care? Would they go to a competitor? Or would they just say, whatever, I'm good, I don't need any of this stuff? So really ask yourself that question to see if you really have something that has validity in the marketplace. Investors love to see evidence of traction in the marketplace. So for us, it's about revenue growth. For companies that are earlier stage, it may be about whatever metric you want to talk about. It might be users, subscribers. If you have a restaurant app, it might be by the number of restaurants you've signed up. If you're a rapping lawyer, maybe it's about the number of raps you have. I don't know. Good job, by the way. Okay, target the right investors. Everybody has talked about this. You're hitching your wagon for the next 5 to 10 years, potentially. Make sure it's the right fit. It's as much them interviewing you as it is about you interviewing them. Does your vision align? Do your values align? Does your time horizon align? Right? Because you may be in it for the next 5 to 10 years because you fundamentally believe in your business. And the investor might be looking at the next 12 to 18 months. So make sure that you're aligned there and the fit has to be the right fit. Okay, this is the biggest one. Ideas versus execution. Everybody has great ideas. You know, being a thinker is fantastic. Being a doer is even better. And I'll give you an example of this. On my ride over here, my driver gave me a fantastic idea for a new startup. Now, the chances of my driver starting a startup are quite unlikely, certainly in the next couple of years. We make him drive a lot. But everybody has a great idea. The reality is investors love to see people that are not only gaining traction, but that are hustling out there, right? If you have to get out there and knock on doors to drive your business, do it. Whatever it takes. If it takes Facebook ads, whatever it is, do it. Ideas are a dime a dozen. Okay. It's okay to get investors excited. You should get investors excited. But the reality is that if an investor is excited in you, there's chances that there's other investors excited in you as well. So it's okay to put a little bit of pressure on them, as long as it's done respectfully. Ultimately, they do have the capital, but it needs to be done respectfully. But it's okay to give them a little bit of fear, right? To say, look, the train's about to take off or the train's about to leave, you better get on. Okay, presentation skills training, communication skills training, writing. So I think somebody mentioned earlier about being professional. I think this falls in that category. What I've seen is, you know, the folks that are able to succinctly tell a story, deliver the message. You may have to write business plans, you may have to write quarterly press releases, social media posts, whatever it is. As somebody who's running the company, you are really the face, and there's a ton of communication that goes with that. If you need to take a class, but it's super important. I actually think the ladies at Sehat Kahani do a great job of this. Great storytellers. You can know everything about what they do based on, you know, some of the things that they've done on YouTube. And really personal stories, fantastic messaging. Asking for help and feedback, it's a two-way street. It helps you, it helps investors, it builds credibility. I think you should do it. There's no harm in asking for help. In fact, investors would love to help you. It helps them and it helps you as the founder. Okay, put yourself in their shoes. I know I'm kind of cycling through this quick because I'm looking at the clock. But a lot of times we go and say, yaar, ye meri problem hai, yaar, ye meri kahani hai, yaar, mere mein invest karo. But actually, if you flip it, and by the way, if you're married, this is great advice for marriage as well. You know, put yourself in the other person's shoes and see how they view it. But you don't know what the investor is going through. You don't know what deal flows are. You don't know what their performance has been. So I think be a little sensitive to that. And number 10, which is really obvious, ultimately, it's a transaction. Okay, they want their money, and hopefully with a pretty sizable return. Okay, but remember, investors are only one piece of your stakeholder puzzle, right? You treat your customers well, you focus on them. You treat your employees well, you focus on them. And ultimately, if you're doing those two things, generally speaking, investors are quite happy. Okay. So we raised like $17 billion of capital, right? That's, like, to us, that was pretty significant. And we increased the enterprise value of our company to $45 billion, right? To us, again, that was pretty sizable to us. But the reality is there's $20 trillion of assets under management throughout the world. $20 trillion. So there's no reason why all the folks in this room can't get a shot at it, right? You've got the right product or the solution. You're a hustler. You get out there and you kick ass. You make the right relationships. You work on your business. There's no reason why you can't get your piece of that pie. And I'm going to bring this back, by the way, and make this a little bit personal. So a couple of weeks ago, I was having dinner with a shareholder of ours. And this is a guy I've known for several years. And ironically, this restaurant is featured in the HBO series Silicon Valley. So irony of all ironies. So we're having dinner at this restaurant. And you know, he's had a good run. The stock market has done well. He's done well with our stock. Everything is good. But he says, you know, it's like, I don't know what to do next. Things are so good. I don't know what to do next. So I said, look, no, I'm looking at Pakistan, and I'm going to Pakistan next week for this conference. And he said, what the hell are you doing in Pakistan? This is a tech conference. This was a big deal, right? So a tech conference in Pakistan. And he said to me, he said, Ali, if you're going to invest your money there, I'm with you. I'm going to invest with you. And I took away two things from that. One is, this is a guy I don't know personally, right? I mean, this is somebody I've dealt with professionally for many, many years, but we've built a relationship. So why do these relationships matter, right? So we've built this relationship. I'm a credible partner. I'm honest. I never lie. And so that's built a tremendous amount of credibility to the point where this angel investor is looking to invest. So when I talk about the $20 trillion out there, that's institutional money. There is a lot of money swimming around there that's angel money that is looking for kind of the tip of that spear. And I think the takeaway for the folks in the audience as well is like, why not us? Why not Pakistan? Right? So there's $20 trillion out there. There's a bunch of angel money out there. It's up to us, right? And if you guys do well, Pakistan does well, we all do well, right? So that's kind of the takeaway for me, is that I'm really impressed with what's happening here. I think the organization here has done a fantastic job. There's a lot of learnings that have happened, and I think there's a lot of people out there looking to help as well. So it's really up to the folks in this room, and I think I've been able to show over the last few slides why these long-term relationships matter. You build that credibility, and over time, you have a lot of people that can help. And so that includes me. So I've put my email address here. If you want to reach out and have a conversation, I'm happy to do it. And if you do well, Pakistan does well, we all do well, and it's a really exciting time. So with that, I thank you for your time. Enjoy the rest of your conference, and Pakistan Zindabad.